top-down analysis is you analyzing the market from the higher time frame, that is the monthly time frame, where you see the overall direction of the market. From the monthly time frame, you must have seen the overall direction of the market. Then you move to your weekly time frame. Your weekly time frame, you use it to plot your key levels. Your key levels, these are the region of your support and resistance. These are key levels. Region of your support and resistance are your key levels. Then you scale to your daily time frame. Your daily time frame will help you mark the trend that is in line with the overall direction. After marking the trend that is in line with the overall direction, you then move to your 4 hours to wait for your entry and confirmation. At your confirmation, that is where you get the candlestick pattern that is also in line with the trend that you are about to go into. So if the trend is bearish, that means the candlestick pattern that should appear at those regions should be a candlestick pattern that gives you a bearish confirmation entry. Okay, I'll share my screen. Okay, I will take off this. I think this was done in the class in the morning by a student. The person that was using my phone was able to mark the key levels on weekly time frame. So let me remove. Okay. So what did I say top-down analysis is? I said, is you as a trader analyzing the market from the higher time frame. You're analyzing the market from a higher time frame. That's what the higher time frame does, is just to guide you, is to give you overall direction of the market. So what is the overall direction saying? If the overall direction is saying bearish, that means as you are going into your lower time frame to trade, you now know your direction, that the overall direction is saying bearish. So if I'm to take a particular trade, I should position myself for only bearish opportunities, only opportunities that will give me a bearish signal. So your higher time frame, what it does, just with your eyes, you can get to know, oh, what is this higher time frame doing? So what am I expecting to do once I go to lower time frames? So your higher time frame, that's the monthly time frame, is just like a guide. So that you will know that, okay, as I'm in this market, this is what is giving me the confidence for me to be in this market. So personally, from what I'm seeing, I can use my trend line to just do some tests. Okay, from here, you've seen that price had broken out of this trend line, and it came back again to test on this trend line. But failure of price testing on the trend line, price was still coming low to give us a lower low. Price came and made a lower low. So this is a lower low. And now price has gone into, okay, price now went up, came back to this trend line. So this is a breakout and a retest, a breakout of the trend line and a retest, a breakout and a retest. So what I've seen now is I've seen a chart pattern already appearing on this higher time frame. This is where you can use chart patterns even on this stuff. It will guide you. So I've seen an inverse head and shoulder. This is it. I did not see it when we were in class in the morning. but I'm just seeing an inverse head and shoulder now. This is the left shoulder. This is the left shoulder. This is the head. And this is the right shoulder. So that is, I've ticked one box now for my confluence. I've ticked one box now that I've seen a chart pattern that is giving me a bullish confirmation from the higher time frame. Another thing is, this is a breakout and a retest. A breakout and a retest. And after this retest, you have seen a candlestick being closed with a full bullish candlestick being closed. I'm not trading on a higher time frame. If you place your trade on a higher time frame, like on a monthly time frame, you end up having a big stop loss. So the higher time frame is just to guide you. It's just to guide you. So now I've been guided. I know what this market is going to do. So after that, I can take away this. Now I've seen that a chart pattern has been formed already. I can take it off. I can take this off. I don't have any business again with those things. So I'm done with my monthly time frame. I've seen the overall direction of the market, that the market is going to be bullish. Then I move to my weekly time frame. I said weekly time frame is for us to plot our key levels, for us to draw our key levels. So our key levels are region of a turning point in the market where price has been testing, areas where price has been testing consecutively. So I use a rectangle tool is what we use in plotting our key levels. So you can follow this cursor, the rectangle tool cursor, and you can see that just observe the horizontal line. You can just move it to where you see it will have many touches if you are extending it from your left. Note that in your analysis, you are taking information from the previous data. You are taking information from a previous data to the future markets. So now we are at November 2019. This is November 2019. So if I should draw my rectangle tool here and I extend it, that means I've taken my analysis from what had happened 6 years ago. I'm not using my data is as strong as that because I'm taking my data from what had occurred 6 years ago. So I can see there are touches. Can you see that we have different touches showing that this is a key level? There's a touch here, many touches come here, price broke out and came back and reacted to this place. This was a support level coming here to become a resistance level. Price came here and you see price was just struggling at this level, not even knowing what to do. It broke out, it broke above, came back again, broke below, went up again, tested here at this point, pushed up, came back. It was still testing, and now price is at this level again. So with this, you get to know your key level. So this is the first key level. So after this, we then clone this. How will you clone? When you tap on it, on this tool, you then hold it. It will be cloned. So you now move it. It's flexible. You move it to the next level that shows more touches. You can see we still have many touches here. You have touches here. There's a reaction here. Price came in here, reacted. Price broke out, went back to this region and reacted. Price came here and reacted. Price came here and also reacted. That means this is a key level. This is a key level. Why? Because we have many touches. We have many touches, making this a key level. We clone again. This is your key level, and you can keep your key level for months, even for a year, without erasing them. because once you are doing this, you are now guided to know what the market will do for the next months, and you are just following the market gradually. So then I move this. So price had reacted here. See, price had reacted here, came in here, reacted, came in here, reacted, reacted at this region. There are so many touches here at this level, showing that this level holds price from breaking below. This level holds price. That is it. So we can then clone it finally. Okay. So these are the zone, the different zone. So now currently price is being traded between this level and between this. This is the current price. This is the current level at which price is trading. So what this market will do is either price will move from here to the next zone, or price will move from here to the next zone. Note that the market moves from zone to zone. The market moves from zone to zone. So once price moves from here, expect price to come here. If price will break out from this level, expect price to come here. This should be the next target for the market. So if the market breaks out from here, expect the market to come in here first before any other thing. So now all these levels guides you as a trader. So we are done with what had occurred in the past. So now we can move this horizontal zone, these are key level, into the future. So you can just move it into the future. So we are having business with the uncharted areas, the areas price have not yet occurred. These are the areas that we are having business with. We don't have business with the areas that price has already occurred. So now we are talking about analyzing into the future. So we are taking data from what had already occurred, what has happened in the past, and you now guide yourself that if this is what happened in the past, that means this can happen in the future. So this is it in regards to uh, top-down analysis, and this is the second part, which you mark your key levels on your weekly time frame. Then we move to our daily time frame. What is our daily time frame saying? Our daily time frame is saying that we mark the trend that is in line with the overall direction. So the trend is bullish. Our overall direction was giving us a bullish opportunity. Why? Because we've seen a breakout of the trend line, a breakout and a retest, and price was giving us a bullish move already. So now, what are we going to do on a lower time frame? This is a daily time frame. You mark out the trend that is in line with the overall direction. So if this is the bullish trend, this is a bullish trend. So this is a bullish trend, and with this bullish trend, price had already gone far, and you can't just jump into this market like this. Even though this is a key level, personally, if I want to trade this particular market, this is what I should do. Remember that you don't have to price when price is high. You buy when price is low. That is when you make profit. So personally, this is what I'm expecting this market to do before I can take a trade. I want price to come into this trend line first. Once price comes here and gives me a bullish confirmation entry, and I enter here for a buy, this will be my first target, but this is my overall target. So now I know this is my overall target. So this is my overall target. Jumping in here will be risky. Yes, it will be risky because if you are entering here, what if price comes down to test this trend line? Because price needs to come back again. This has been a long movement. This has been a long movement where you can see price was just heading higher. Price was just heading higher. So for this impulsive movement, this is an impulsive moment. For this an impulsive moment, there should be a retracement. Remember what we said about the Fibonacci? That your Fibonacci helps you to get a 50% retracement into a particular level. The level might be your resistance level or your support level. So personally, if I want, what I can do now is, okay, let me get my Fibonacci tool and know the level where this price will be retracing into. Where will this market be retracing into? So I pick my Fibonacci tool. I extend it from swing low to swing high. Already price has tested the 50% retracement. So that's why it really gives this movement a bit upward. So remember what I said about the 0.618. That personally, at times I prefer price to come into 0.618 before I take any trade. I personally avoid 0.5 because I know if I'm going in for 0.5, my stop loss will be wide. So let me avoid something that will make me take a higher risk. I prefer doing what will require me to take a little risk, and I pay attention to my reward to be more, or my reward to be much. So with this, okay, let me highlight levels. This is the level of 0.618, and this is the level of 0.5. So I'll take away my Fibonacci too. So with this, I've seen that if price comes into my Fibonacci, can you see that my Fibonacci level is also the region of my trend line? So this gives me another strong confirmation if price should come into this region. And what will be the next thing you'll be expecting? You then move to your 4-hour time frame. Once price comes into this region of your Fibonacci, and your trend line and gives you a bullish candlestick pattern. We have many bullish candlestick pattern. When if you check what we did on candlestick pattern, you want to buy in this market. So you are now waiting for a candlestick pattern that will give you a bullish signal. That is just what we are waiting to do. A candlestick that will give you a bullish signal. So once you get a candlestick that gives you a bullish signal on the 4 hours and you've gotten your entry, you can then jump into the market, and this will be your first target. This will be your first target because once price is moving higher, price will come and test here first. Price will test the here. Don't worry if you don't understand what I'm doing. I'm just trying to explain the top-down analysis. We are breaking the top-down analysis into different bits. So for today's class, we will stop at the weekly time frame where you will learn how to plot your key levels first. So I'm just explaining all of this. Then I will go back to you being able to plot your key levels first. That is just our target. So if you can draw your key levels first, yes, every other thing you'll be able to do it. So but key levels is the first. So I was just trying to explain the whole concept of top-down analysis from your higher time frame to your weekly time frame where you plot your key levels. If you can see my chart is very sweet. It's very neat. So why complicate everything? You don't need many things. You don't need many tools for you to become profitable. See, the cleaner your chart, the better advantage you have. It's not about drawing too many things. The ability for you to see that you can make your analysis so simple gives you an advantage in the market. If you can make trading this simple, that is where discipline is demanded. Discipline is demanded. Patience is demanded. And not being greedy is demanded. These are things that can make you even lose when you've done a very nice setup like this. And because you were so indisciplined to wait for the market to line up with your analysis, with your setup, eventually it happens that maybe the market stops you out and you are now, oh, why is the market this, that, not knowing that you are the cause. You were unable to wait till the market lines up for you to have a good entry. So that is why I told you this before, that the market understands your emotion. The market understands the psychology of a trader. So once your psychology is messed up, the market knows how to tune you. The market knows how to make you emotional. It's something that has happened to me. So if it happens to you as a new trader, that means you have to see how to work on, because your weakness will be unveiled. So don't feel bad when your weaknesses are unveiled. That is why you are a trader. Once your weaknesses are now unveiled, you now work towards it. You can't take away emotion out of trading, but you can minimize, you can work on it, that you are not too emotional when it comes to trade. That's why I'm giving you an approach that will make you to see how you can detach yourself from the market. You won't detach yourself totally, but you will be better than the scalpers. You will be better than most of the day traders that are too engrossed with this market, that they can't take off their eyes from the market. This is you, that you are now allowing trading to work for you without you putting in so much energy, without you spending all your time on the chart. This is the best approach. Every other approach, when I'm saying the best approach, you can use SMC trading strategy, but you apply the approach of the top-down analysis, where you are analyzing from a higher time frame, not analyzing from a lower time frame. That is where most strategies fail. There are many strategies out there, they are just analyzing on a lower time frame. But top-down analysis, this approach guides a trader to fizzle out the noise in the market. How will you be able to fizzle out the noise in the market? From the higher time frame, where you are seeing lower candlesticks. You are not seeing plenty candlesticks. The moment you start seeing much or plenty candlesticks, it will reduce your sight level. You won't see what should be seen in the market. You won't see it, because you know how someone's eyes become blur. Not that you are not seeing something, but you can't see afar. So analyzing from the higher time frame, this is what it does. It makes you as a trader to see the bigger picture. So you can see so far the bigger picture of the market. So that is it for this approach. So I welcome question after this class. I'm going to, because we are moving into the practical aspect, where everybody, if you have seen the pictures I've dropped on the group, that all the students they practice this in class. They all practice this in class. They try to, what did they practice? How to draw, how to plot just the key levels. So today, you need to plot your key levels. So all our Vetor students, I want you go to, okay, we have 3 persons in class today. Great. Those that have missed, okay, we have the recorded video. I believe they will also watch the video, and they will do this assessment as well. And for you people, I want you to do it and submit it today before you sleep. So let me go back to what I said about the key levels, so that I won't bring in all these things again. Then you stop at plotting your key levels. So I said you plot your key levels on a weekly time frame. Your monthly time frame is for the direction of the market. You see the direction of the whole market, while your weekly time frame helps you to plot your key levels. Your key levels are the levels of the support and resistance which you are using this box. The rectangle box is what is used in plotting the key levels. So you try to make your key levels to be tiny on your weekly time frame, because if you make it this big, if you make it something like this, if you draw something like this, the moment you go when you are scaling down to a lower time frame, it will become bigger like this. And when it's big, when it's as big as this, it won't give you the vibes. Like it won't make your analysis to be neat. So you whatever, anyhow, you won't be perfect. Whatever you can do, I'll give you the next from now till 11 o'clock. So once it's 11 o'clock, I will note that you haven't done anything, and maybe you will do it some other time. But for you to be in class till this time, you need to do that. You need to do this and send it to my DM between now till 11. So before I end this class, I want to welcome question. Do you have anyone with question? Ask me question.